G'day traders, I'm Greg McKenna. Welcome to Markets Morning. Do you like the new backdrop? Mrs. McKenna put that together for me yesterday, so thanks very much to Lisa. Interesting night last night. Obviously, a 7% fall in the price of Brent and WTI is a big move in oil. The question is whether that was the capitulation or the liquidation event that we needed. It could have been, but this is catching a falling knife. The other day when I wrote my crude piece and WTI, I said I still hadn't had a signal, and clearly I still haven't got a signal to go long of oil. But we'll talk about that. We'll start off with oil today, and then we'll go currencies and stocks, and then we'll look at the other commodities. But what we saw last night was we saw a reversal. We saw President Trump being quite aggressive. We saw the optimism about the trade talks between China and the US fade a little bit. That was really interesting. Larry Kudlow popped Peter Navarro. Said he was talking out of tune, I should say. He was off the reservation, and that his views last Friday, which saw markets sell down, didn't represent those of the administration or the president, which was pretty aggressive. Anyway, we've still got talk of tariffs, and we've got the EU this morning. Malmstrom, their negotiator, saying, well, you know, she doesn't think that there's any new auto tariffs coming on the EU while they're talking. But that sort of is a counterpoint to all of that. The single most bullish thing that can happen to markets between now and Christmas is a deal between Trump and Xi. But whether or not that could happen is really brought into stark relief by a conversation that VP Mike Pence had with the Washington Post. I've had a look at it in Markets Morning, so have a look on the written one. But essentially, it says what he says. With that speech a couple of months back or a month or so back, it's more than about soybeans and aluminium and cheap stuff. Anyway, have a look at that. So it's not a done deal by any stretch of the imagination. On currency markets, US dollar pull back, and pull back a decent amount, actually. It's back now at 97.11. Could be another one of these weekly head fakes above 97. We'll have to wait and see. Euro's up at 112.93. Sterling up at 130.20 as Brexit excitement gets going. It seems the EU and the UK government, Theresa May and Dominic Raab, have cobbled together a deal. They win some stuff, the UK, the EU wins some stuff. It's now got to get through the Commons, and a lot of people are saying that they are walking away from it. So I'll have to wait and see what happens there. This is like pulling teeth, folks. For me, I would be using options rather than spot right here at the moment to see what happens. The Aussie dollar is higher as well. It gained about 0.6%. It's at 72.17, waiting for the wage price index, which there's quite a bit of excitement about, could be strong. So we'll keep an eye on that. The actual number the market's looking for is 0.6%. Anything stronger than that, an acceleration to 2.5%, say, for yearly wages in the Aussie will rocket, because what it'll say is people go, wow, that's exciting. That means the RBA is going to tighten sooner than expected, but we'll see the data at 11:30. For some of you, that means that it will already have been out. The Kiwi's up, Canadian dollar flatline. Basically, oil's collapse, counterbalance US dollar weakness. Dollar yen, it's basically flatline too. Stocks weakness counterbalanced everything else. So there we are. Let's dive straight in. We'll talk about oil. What have we got? Well, when you look at that, that's the weekly chart that we talked about on Monday. No support at 59.25, and then utter capitulation when it went through that trend line. Now, as I said, it was only a two-touch trend line, but it was a channel. You know, touch, 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 kind of touch. So where are we now? On a pure Fibo extension basis, on that break of last week's low, then you say 52.25, but we didn't really recover. So that would not normally satisfy the Greg McKenna first ever system because there was no pullback. And my first ever system was a patient system which said that you got a move, you got a retracement, then when the top of the move or the bottom, depending on which way it's going, that's when you got long or got short and went with it. What have we got here? This is really important. I've got it at 55 lower than that on another chart. So I'm a long way back, so you can, I don't crowd the screen. So that might be out by a little bit. But what you've got, see this? Top, 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 break, run. Remember we came back and tested it, and then we ran. Now we are back here. So this is pretty critical. This 55, 55, 50 region is critical. If you fall, then you've easily got 52. You've easily got 50. You might even have 42 to 45. But have to wait and see. That is a falling knife, as is the daily. That is an absolute falling knife. Peter L. Brandt put out a tweet this morning on Brent. We'll go to Brent now. Saying that sometimes you see candles like this in the middle of a trend. And so he's talking about $42 potentially. Can you see $42? Of course you can see $42. If you take that, oh, wrong one. I want that. If I can pick it up. I'll get rid of it so we can start again. It's easier that way sometimes. Again, I'm a way back, but you know, I said yesterday 60 was the level that I wrote down to myself. We could get there, so I'll have to wait and see. Again, falling knife territory, and you know, too far, too fast. Absolutely. Think about that. If that was going the other way, that way, I'd be saying, be careful, be careful, be careful. But I've got to wait for the momentum to fade from it. Now, the momentum could fade in a number of ways, but the momentum's still there. So you've got to respect the momentum in this move. There are a lot of options. People are getting excited about the options. A lot of options money a lot of options in the money. Will that see some buying? What will the Saudis do? I'm not sure. Right, what do we got here? We've got a move here that could see it back at, this is Euro obviously, 113.55.60. Italy hasn't backed off. That hurt Euro initially, but Sterling's giving it a lift. The US dollar struggling a bit. What are we seeing today? We are seeing another repeat of the consistent theme that we've been talking about for months. The US dollar catches a bid when it has a catalyst. The US dollar struggles if it doesn't have a catalyst. There's a massive catalyst tonight in CPI, one way or the other. But there are also massive catalysts. We have Westpac Consumer Confidence. We have wage price index in Australia. We have Japanese GDP. We have German GDP. We have EU GDP. We have UK CPI or inflation, the whole host of CPIs. And then we get to US CPI. Could be a big night. You know, you could see 100, 150 point ranges easily in any of the majors. Easily with this kind of noise coming out. You know, everyone's expecting really weak German and European data, but will it be? Everyone's expecting US CPI to be large based on PPI. But will it be? Probably. That would be the way that the wages data, that would be the way that the price pressure data that we're hearing is reflected. But the question is PPI and CPI related? Do companies feel like they can increase their prices? Will it flow through, or are they taking it in margin? Really interesting. But for the euro, we've found a low around 112, 112.20, which is the number we talked about on Monday. Now we could easily see a bounce back to 113.60, maybe even 114.20. We'll have to wait and see. But if that trend line breaks, then things change. And you can see on the 4 hour that, you know, it would almost guarantee. Not there is anything that guarantees anything in trading, other than if you don't risk control, you'll lose money. It's about the only guarantee, although even that's not true though. Even that's not true. Some people lose money in spite of themselves. I'm gibbering today, aren't I? 8 minutes and I have hardly done anything. Dollar yen, that's something to watch for stocks. Not going anywhere. 114.50, 114.75 is the key. If it can't get through there and it stalls here, then you'd expect it to come back. And these are not big moves, obviously. 113.36. And if it got back down through 113, then you'd say, okay, maybe we're going to run to 110.5 or something like that. Sterling is silver, or silver is sterling. What have we got? Actually, silver's not sterling, as you'll see in a minute. We're running up. We're going to run back. We're going to retest this. What have we got? 131.40. So we're going to test 131.40. But this Brexit deal reminds me of TARP. You know, are they going to be able to get it through? Labor has said no. Rees-Mogg has said no. There's a bunch of cabinet ministers who have said yes. Naturally, Boris Johnson said no. The Lib Democrats say it won't go through. So far, the DUP said no. So, you know, this is why I say this is a good time for options. You say, Greg, but volatility is so expensive. Yes, volatility is expensive for a very good reason. You could see sterling in the next 3 months trade either 137 or 142 on the top side, or 120 on the bottom side, depending on the outcome. So what's the cost of volatility? The cost of volatility is what you can sell volatility at tomorrow or in a week's time or something like that. It filters into the price, but volatility reflects the potential outcomes as well. Anyway, I'd be trading options if you can. Because I've got no idea what the next news flow is going to be, do I? Wouldn't have a clue. I can't pretend. I would love for a deal to get done, one that serves the British people and doesn't hurt the EU. And whatever that means. You know, I'm in Australia. It's not my right to tell the Poms what they should do. But I just know that all this uncertainty is killing business, killing, you know, people. Yes, there's lots of jobs, and thank goodness for jobs. Anyway, Aussie. Looks like it's going to rally. 50-60 on the 4 hours, it looks like. Wage price index is obviously going to be key. Westpac sentiment's going to be out. The NAB business survey was out yesterday. It wasn't terrible, but there were some signs. So inside the Westpac data today, I'm going to be looking at unemployment expectations index. If that's starting to rise, then we will know that things are starting to look a little bit more dodgy in the employment market. But wage price index is going to be the market mover. If it's 0.4 or 0.5, Aussie falls out of bed. If it's 0.6 or 0.7 or 0.8, Aussie's going to roar, and I'll have to exit a short. Anyway, all right, what else have we got? Dollar CAD, not going anywhere, so we won't talk much about that. It's stalling. That's a warning, folks. That is a warning, as is the thing that comes straight after dollar Sing, dollar CAD these days, which is dollar Sing, down again. Asia did really well yesterday. Any talk of... Oh, and of course, Asia did well because the Chinese intervened. They moved the fix, naturally, because the US dollar had been stronger. But then they defended when it got up to 6.97 in CNY and CNH terms. That turned sentiment for the buck in our time zone. And then Premier Lee, he said that China wants stability in the currency. And then, of course, we heard that Li Hua is going... Sorry to all my Chinese viewers about my vice president, Li Hua, who's going to US to talk before the trade deal. So that turned sentiment. Really big news in Asia if there is a trade deal. Now, I don't think there will be, but a talking head saying, I think, when they've got actually no knowledge, waste of time. I know I write about it all the time, and I've talked about Mike Pence. What have we got? We've got the Kiwi going higher. But the reason that, going back to Asia, the reason it's positive for Asia and emerging markets and negative for the US is it takes its foot off the rest of the world. I'm not sure Donald Trump's ready for that. Anyway, looks on that like Kiwi wants to go back and retest those highs. So we'll see. We'll see if it can hold them. Don't have a signal on either the Aussie or the Kiwi on the daily. Or actually, I've got a signal on the Aussie, but not the Kiwi to sell. Let's go and have a look at gold. Gold got down to 11.96 odd last night. Managed to just claw its way back. It's got to hold above 11.95, otherwise we're talking about 11.83. The fact that it caught a bid, now obviously the US dollar was weak, so that helped. But it got a tiny bid as stocks reversed is important to remember going forward. Silver, of everything I looked at, silver looks really struggling. Now, what have we got? We've got 98, 13.93, right? You know, that could be really ugly if 13.93 gives way. So keep an eye on silver if you are a precious metal trader. It's been doing some funky things lately. Where we've looked, copper's the only one we haven't looked at. We've looked at the oils. Same story, a weakish day, but support still holding. So not much there. Trade tensions are supposed to be good news, or lack of trade tensions are supposed to be good news for copper, but we have to wait and see. Now, what have we got? We're starting to get people look at this and the other indexes in the US as potential reverse head and shoulders. As I said to you yesterday, that is a chance, and in many ways you'd think that's the setup that I'm looking for, right? Or when I say I mean the market. But we've got to get up through 28.23. So what did we get yesterday? We got nothing. We had a dud day kind of in the middle. The high on the S&P, the physical, was 27.50 something. It closed at 27.22. So we kind of closed mid-range. What does that tell me? When I see candles like that, I'm just going to go with whichever side of the candle breaks. So I'm not going to be bullish and I'm not going to be bearish. I'm simply going to say this is getting to be a messy chart, and whichever side of that candle breaks in the next 24 hours, that's the one I'm going to go with. If we end up with an inside day, then we know that the rubber band is being tightened for a big move. So I'm not doctrinaire by any stretch of the imagination. I have a medium-term view that, you know, we trade lower. But the issue from a day-to-day, you know, most of the people who who watch my videos are trading 1 hours or 4 hours or dailies, right? I'm giving the broader picture, but the path, the move lower is not path dependent on a daily or hourly or 4-hour basis. It's path dependent on how they all sum up in the end. So that's why, on a day-to-day basis, I try not to get too bullish or bearish some of these things when they get a bit messy. So that's the key for S&P. In terms of the NASDAQ, similar story. It looks more bearish than the S&P. But the Bank of America Merrill Lynch survey showed that the exposure to FANGs by the big fund managers was at its lowest level since 2009, which is really, really interesting, isn't it? So bit of good news, and maybe they'll roar. So keep an eye on that. Now, FANGs are not the only stocks on the NASDAQ, clearly, but keep an eye on that. We'll keep an eye. CPI is going to be important for stocks because it's going to inform, it's going to inform thoughts about the Fed. So that's going to be really important. In terms of the Aussie, we're holding resistance. Like, this is a kind of a neckline. We squeezed the other day, but we couldn't do it because the US market failed. And so now we've got some downside pressure. 57.68 to 57.90 needs to hold. Otherwise, we're going back to the lows. Would be the key thing there. And Bitcoin slipping. Where's my Bitcoin chart gone? Bitcoin is 62.67. They're only small, tiny little moves, right? But it's going nowhere. So real volatility in real markets mean people aren't playing Bitcoin. Anyway, that's it from me. As I said earlier, there's a massive data out. Chairman Powell speaks at 10 o'clock my time, so 11 UTC, or what we used to call GMT, tonight if you're watching from overseas, tomorrow if you're watching in Australia or New Zealand or Asia. So keep an eye on that. But the data tonight, wages prices in Australia today, the triple treat from China, Japanese GDP, German GDP, EU GDP, UK inflation data, US CPI. This is a monster 24 hours, folks. Don't be doctrinaire. Go with the data, but also know that a good number in Germany could be reversed by a bad number in the US. Or vice versa, you know what I mean? A good number in Germany would be enforced by a bad number in the US. But you know what I mean? The data's going to be everywhere. 17 minutes, I've got to go. Have a great day. I'll be back tomorrow. Bye for now.